Capital. It's been the focus of many discussions over the past few years, with alternative sources supplying it and regulators looking to place standards around it. We spoke with Howard Mills, a senior advisor at Deloitte, about capital in the industry, as well as international and U.S. regulation. Here's his take on the issue.
Well, one of the big things that we're watching in 2015 will be the impact of new capital coming into the insurance market. Of course, capital has really been the focus of a lot of the regulatory changes that we're seeing. Requirements that insurers hold more capital seems to be the trend that we're headed toward. So one of the things we're wondering is, will new entrants to the market bring new capital? One of the problems, the hurdles that they face is regulatory scrutiny. There's been some talk for some time about hedge funds getting into the insurance space. They've met a lot of very tough questions and resistance from regulators concerned about their staying power. You know, will they be in the market for the long haul, which is really what the insurance industry is all about. So new capital really is something that we'll be watching. We don't quite know where it's going to go. The fact that TRIA was recently reauthorized by the Congress shuts down one potential avenue for new capital coming in, because there won't be the need, frankly. The terrorism coverage will remain plentiful, but that will be one of the trends we'll be watching in 2015. One of the big issues that insurers will be facing in 2015 is the continuing importance of global regulation. We are seeing pressures coming from the International Association of Insurance Supervisors, impacting state regulators here in the United States, impacting the federal-state dynamic. The regulatory dynamic has changed very significantly in insurance in the last 5 to 6 years, and nowhere is that more clear than the importance that international regulation has. Recently, the IAIS adopted a basic capital requirement for globally systemic insurers. This is viewed by many as just the first step in the development of further capital requirements that they are seeking to apply globally. This is something that the U.S. insurance industry and the U.S. insurance regulatory community has really had a lot of concerns about. Many on the U.S. side feel that the international focus is too reliant on capital. Capital, of course, is very important in monitoring for solvency, but it's not the only measure, it's not the only metric, and the U.S. industry has really been very concerned that the international body is moving too quickly. The U.S. has frankly been kind of swept along in this. The U.S. industry has come together and decided that they need to come to the game, come to the IAIS with a common U.S. point of view, and they've worked to develop that. But there remains a lot of concern with the speed with which the international regulatory authorities are moving to adopt a global capital standard. We know the regulatory environment remains very uncertain. We'll be watching in 2015 to see where it goes. Uncertainty is really the rule of the day. We have all these new players created by the Dodd-Frank Act at the federal government. We haven't seen a lot of activity, frankly, coming from the Federal Insurance Office since the issuance of their report, but just the fact that they do exist, the federal regulators do exist, all the international pressures that exist, that is all impacting the state regulators very, very much. So we see clear trends. A very, very tough focus on consumer protection, a laser-like focus on capital, and certainly more restrictions on the use of capital and less flexibility in all likelihood for the use and deployment of capital by insurers. A real challenge in terms of compliance. I mean, all these new regulations coming out, again, with a very strict focus on consumer protection, capital. There are frankly more opportunities for insurers to get into trouble. And today, a regulatory infraction isn't like it might have been in the past, where you meet with your regulator, you pay the fine, you make whatever restitution, and you move on. The danger today is, of course, with social media, that these things can be blown up very, very quickly and move beyond a kind of run-of-the-mill regulatory infraction and become a reputational brand issue. So I think that the regulatory environment is going to remain very, very challenging for insurers in 2015 and beyond, and compliance is going to be a major challenge. It will certainly be more expensive to be in compliance and will require much more focus on the part of insurers.
For the latest world risk and insurance news, visit the RIN TV On Demand Library.